All right, folks, for those that just joined, again, my name's Dave Hodge. I'm president of Zimtu Capital Corp, your host today. Just by way of explanation, we are going to mute everybody very shortly here. But if you would like to ask a question, please feel free to unmute yourself and ask your question. You can also use the facilities provided by the Zoom people, and you can text a question at any time. Where is that feature?
Just in the middle bottom of your screen, you should see the chat when you move your mouse around.
So you just click on that, and then you can send us a message, and we'll address your question. I see we've done a number of these Zoom meetings now, and the first one we did was on commerce resources. We have done a number after that. I see we have representatives from commerce here today. So in the question period, if you have questions on other companies, we'd be happy to try and address those as well. But at this point, I'd like to, I forgot your last name, that's why I stalled there for a second. Anyway, I'd like to introduce James Walker. He's the president and CEO of Aries Mining, is it?
Strategic Mining.
Strategic Mining. Oh, of course, how silly of me.
Sure.
I should have been able to recognize that just from your picture.
You should have, yeah.
Yes.
It's a good start, isn't it?
Anyway, this is James. Take it away, buddy.
All right, nice to meet you, everyone. Can we bring up the first slide?
Yeah.
All right, can everyone see this?
We're going to present the screen.
Okay, let's, one second, everyone. We're just sharing screen. Okay. All right, okay.
Two people in the waiting room.
All right, okay.
That's where you go ahead.
All right, okay. All right. I hope everyone can see the presentation. I'm going to try and convey some of why this is so great. Before we launch into this, oh, 1 second, Mike is doing something.
Go ahead.
Okay. A little bit of background before we go into the presentation. We weren't actually going after anything specific when we bought this mine. The real intention was when we were about a year and a half ago, we were just looking for any project we could find that was close to cash flow. So permitted or close to permitting or in production or anything like that. And we must have gone through about 150 different projects looking for things. It could have been gold or anything like that. But this is what we actually was the best candidate. It was already in production. It was already permitted. And it didn't need a lot of money to be thrown at it to get it into a higher level of capacity and production. And by all appearances, the margins on the product were enormous because the guys who were running this weren't even processing it. They were just digging it out of the ground, throwing it in a bag. And we saw that and just obviously thought, well, we can improve on that. Yeah, it looks to be extremely profitable. So let's just dive straight into it. So if anyone knows anything about Fluorspar, I can just talk a little bit about it quickly. So it's an industrial mineral. You'll find it it's used in the process of creating aluminium. It's steel, lithium-ion batteries. If you've ever wondered in smartphones why you can touch the screen and you don't leave marks on the screen like you would on glass, that's Fluorspar in the screen. It's used in cement, refrigeration units. It's a fluorine gas. It's used in things like asthma inhalers, 25% of medical supplies, Hydrofluoric acid is another big one. It's pretty ubiquitously used. So the screen that you've got in front of you at the moment, it says critical mineral. What that means, as defined in the US, it means that any mineral that the US government deems critical to the national safety of the United States. So they've got, I think it's 35, 30 or 35 minerals that they've classified like that. This is quite a rare one in that list, and it's near the top of the list because the USA imports 100% from abroad, and you get all sorts of problems being created in the US. For instance, 80% of all the asthma inhalers in the US, it's dependent on one mine in Mexico, for instance, and so it's created this real issue for the states. And what this translates to is it means if we want to get permitted faster, or if we want to fast track applications on new mining sites, the government pushes those through a lot quicker. It also means once we get going, we're entitled to things like government grants and things like that. So just to really push this through, I mean, so yeah, that'll give you a bit of a background about this. I mean, the aluminium is probably a big one too, because obviously it's you use about 60 pounds per ton produced, and hydrofluoric acid is another big one too. That's not even included within the stats for this, because they have to import all of that, and it's ubiquitously used in all sort of manufacturing processes as well. All right. Okay, as we mentioned a bit earlier, yeah, the US imports 100% of it. What's quite interesting about this is that China used to be the biggest exporter of fluorspar, but as its industry increased over time, it went from a net exporter to a net importer, and that really upset the balance of the global markets, and it basically led to an increase in price over time. So so fluorspar's been climbing, and the supply can never meet the demand either. So it's, oh, sorry, it's all right. Jumped ahead a little bit.
Yeah.
All right. That's all right. We can.
You need to go back to the.
All right, there we go.
Sorry
Okay.
about that.
All right. And back we go. All right. Okay. So domestic consumption's increasing. What these graphs don't show are things like hydrofluoric acid, which they'll import as is. So there's no, even for the manufacture of that, there's no domestic supply coming out of the country at all. So once we go into production, we'll be the only domestic supplier within the whole of the US. And that's meant that we've been approached by a lot of big industries very quickly. So the ThyssenKrupps, the Pacellas, Contours, even Japanese firms like Marubeni have approached us about getting a supply of this stuff, because there's not many countries that do this. I think we've got the ones listed down there: Mexico, Vietnam, South Africa, China. Amongst the others, there's Thailand produces some. Canada has a very small operation as well. But there's not many countries that do this, and obviously we'll be adding the US to this list once we get going. If it hadn't been from COVID, I don't mind saying that we would be in production, but it's been very difficult to sneak drillers in across the border and that sort of stuff. And so the question here is the mining operation, because the reference is to rapid permitting. Yeah, so a bit just to answer Michael's question on that, the mine was in operation. So when we bought it, it was operating at a very low level. And just to give you a bit of background about that, there were two guys down there who were artisanally mining, essentially. So they were just seeing what looked nice in the wall, and they were just driving a loader into that and just taking that out of the face and putting that in the bag and selling it. So obviously we looked at that and thought, well, with obviously a drill and blast operation and a big plant, obviously you could increase from a few tons a week to a few thousand tons a month. But when I mean rapidly permitting, I haven't got to this section in the slide yet, but there's an area of the mountain range where the fluorspar appears that was permitted, that we bought. But the rest of the mountain range was sort of blue sky, we permitted. But if we want to get even the blue sky potential things in, which has got no permitting on, then it's fast tracked. So you're looking at about a 6-month process from Here's the mine plan for these new sites to going up and mining. So, hope that answers that question. That's good. All right, let's just move on. So just breaking down a bit of how the market looks within the US. So the majority of it goes into a high-grade fluorspar called acid spar, and that's defined where the fluorspar has been upgraded to a sort of 97% or greater purity, and that feeds into the hydrofluoric acid and aluminium production. And the met spar, which is actually what the guys were able to naturally get out the ground, that goes into things like steel production and flux and cement, things like that. What makes the mine so unusual is that, as we mentioned, the guys were able to just take the stuff out the wall and sell it, and that was going straight over to Ohio steel mills and people like that. But it's actually very rare to get those grades naturally occurring. The typical grades you would find in a fluorspar operation would be in the sort of 10 to 15% range, somewhere around there, Raul, something like that. Whereas the guys that we bought this from, well, it's our fluorspar now, it was coming out the wall at sort of 75%, and we were sending samples off to ThyssenKrupp, who were running their own tests, and they were coming back with 80% natural purity, and it's very rare that occurs. And I think the only mine we've seen that's analogous to that was the Las Cuevas mine in Mexico. Apart from that, it's very rare. I mean, even the big mines like Fluor, which have just got into production down in South Africa, which I think tracks is through $100 million at that, you're looking at sort of 10% or 20% purity. So it's like a less than a third of what we were getting out of the wall. So the margins we expect on this, just to produce acid spar, and our intention is to produce almost entirely acid spar from this because the margins are greater. It's not a huge jump in purity. So, all right. Just to give a bit of background about this, so there's the whole area that we're looking at is sort of a 9 kilometer by 5 kilometer anomalous area where across the entire span of it you get enormous numbers of fluorspar showings. And so before we actually went and bought the mine, I know Raul, who's our geologist. I know him through a few other projects. He was actually a fluorspar expert from working on one of Europe's largest fluorspar mine, and we went down to Utah and we walked across this mountain range, and just from walking down there, we saw like a dozen pipes at surface. And you know, if you're thinking historically, these things were 100,000 to 200,000 tons. You know, we were discovering tens of millions of dollars worth of product just, you know, at surface that was just sitting there. So obviously, as soon as we saw that, we just staked the entire range. So Raul and his guys just went across the entire mountain range, staking whatever they could to get the whole area. And what's quite interesting is that no one had ever done this before, because historically there had been a sort of 20 landholders sort of during the 50s that were just artisanally mining at the same as the permitted area that we bought. But obviously they died off and these claims had lapsed. And so for the first time in this sort of area's history, we managed to consolidate the entire district. We'll talk a bit more in a minute about how Raul has managed to identify sort of several dozen pipes across the entire area through geological features. But it's suffice to say, this is a huge area. We're going to be looking at decades worth of production. And you can see the Lost Sheep mine right at the top, right at the northern part of this diagram here. But the rest of it is also flooded with fluorspar. So the Lost Sheep mine is, I think, 10 acres. But you know, there's thousands of acres here full of product. Also high grade, very consistent grade across this entire range. Another question?
No.
Oh, no?
You're looking to present? Yeah, we're just going to have Raul present now.
Yeah, on that same slide. That seems like.
You want to do that one? Okay. Just passing over to Raul quickly.
Yeah, I'll let you take control.
Get it in there. Same slide. So, well, back to the to the same slide that James was mentioning. When I was joining this company on the private side before taking it public, before talking to James and taking it public, I was invited as a director of the mom and pop operation. It was 30 hectare, small thing, but the whole vision was, it was a transition between the Fluorspar that was being produced in Illinois, which was the main supplier of the US until those mines shut down. So and this area was completely open. So the whole potential was to being able to have the opportunity to monopolize the district. This is a very famous district, but again, in the 50s and the 70s, there were a myriad of small operators and a few mines going, some prospects being developed. And then after the market tumbling in the 80s, only the biggest mines were continuing working as a small scale operations, and everything basically lapsed. So the whole point was to at least get the mines and all the historic prospects. There's good reports of the USGS. And open ground, nobody was competing with us, put the package together, and then once the package was put together, being able to take it public, which was the beginning of ours and how we got involved in the company. So one of the things that really attracted me is comparing these Fluorspar deposits with other ones in the world is the average deposits worldwide are 20%, 25%, and that's considered high grade. And in this operation, we were mining 60, 70% right off the bat. Another of the problems that fluoride has when you're dealing with low grades is the metallurgy. It requires a lot of grinding, flotation, is very binded with silica, and it can be a nightmare. The process can be uneconomic because of the costs of processing. In our case, we don't even need to blast. The ore occurs as pipes, and I can go to the next slide to prove it. So the ore occur as pipes, and it's very loose material. It's like a coarse grain sand, what we call the sponge ore, and you just need to scoop it. It doesn't need to even get blasted. So imagine the mining costs on that. It's pretty well restricted. These pipes are intruding. They're so elliptical, vertical pipes that are getting through limestone, so you get a very competent Hodge rock. And the way, if you look at the old mine plants and what is left from the old mines, they're glory holes. They look like the kimberlites after. So don't think wrong. They look like the kimberlites or those sort of pipes with really steep walls, circular in plan view, and they don't need any additional support. So mining is relatively simple and cheap. You just mine the ore and there's basically no dilution. You don't need to go on a cone for an open pit. Just go down, mine it until you reach the bottom. Another of the advantages of these ore is the lack of sulfides. Sulfides are a big penalty for this market, and this particular kind of deposit, it's only quartz and carbonates associated to that, very easy to remove. And the grades are so high that as Metspar, it can be just crushed and bagged, and that will be direct shipping, DSO. But if you want to do a more upgraded production, it can be very easily upgraded, crushing, grinding. Imagine with this friable rock, this kind of ore is so simple that actually pays for the cost. We can be in the lower cost producers in the world. Oh, that's
one that I keep telling you.
Image, they are exposed at surface. They go all the way to surface. So what we think with the district scale, if you look at this slide, this is like a side view of the Spore Mountain, and all those blue highlighted areas is how the mountain broke. We're looking at like classic extensional geology setting from Nevada, Utah, all those ranges and basins. In this case, this is the edge of a caldera. The caldera collapsed, and that's why these bridges are related to a volcanic event. But during that process, it was an extension process, and this behaved like a giant domino. So all that we're seeing here is what I highlighted are the fault plains, and everything has been shifted like a domino towards the left of your image, which is towards the south. And curiously enough, the pipes are exposed at surface on those fault plains, on all those south slopes consistently. Now that we reconstructed that in 3D and we finally made an interpretation, which is a very simple interpretation that you can all put all those slices together. And then what you're looking is in the fault plains is the lower part of the pipes exposed, and then the upper parts are on always on the left block, or the south dipping hanging wall blocks. And those are the blind targets, but not necessarily blind targets, because we found them at surface. And we sent the geologists last week and the previous week, we were doing a ground reconnaissance campaign to prioritize some of those targets. We see those features at surface. They are like recessive features in the topography, or breaks in the, we got really good markers with the limestone units that can be like, there's no coverage. You can map from a satellite image very easy. And we see the breaks, and then in the two images above that, you can clearly see one, the white sub-rounded area breaking the limestone. And then the one on the right is also very evident. You see on the left, the limestone beds, like dark linear features, and then comes the whitish, reddish blip. That's a volcanic breccia. So those are the unmined targets. And we already identified, about 3 dozen of them.
Yeah, about that.
Went to test about half of them, and then from those half of them, we found in 80%, we found the right textures.
Yeah.
And even fluoride right at surface. So consolidating the whole district, to put it this way, having the opportunity was a unique opportunity to put together this. There's no competitors. And then also in this large image, you see in the back, large open pits. So that tells you how mining friendly this area is. That's Materium and their unique beryllium mines. So this area is also known for exotic minerals, beryllium, titanium, vanadium, fluorspar, and not competitors, which is what we really like the most.
Yeah,
in a nutshell.
Yeah. Yes. Well, yeah, absolutely. Well, not just on the area, but the country. So like, it's a perfect kind of industry. All right. Let's I think I'll go for this. Yeah, that one. All right, so Raul's just talked a bit about the area itself, as in looking at the actual mine site. What came with this is obviously we bought an industrial estate that came with it that just sits on the rail system. It's got a rail system built straight into our plant. So the plant that we're going to be constructing is in the Delta, the town of Delta. It's going to be a very basic thing. It's going to be a crushing circuit, it's going to be a grinding circuit, and a flotation system, and that's going to produce us the acid spar, which is likely going to load straight onto trains for the rest of the states. It's the upgrade for this is actually very easy because we're already connected to electricity, we're already connected to utilities. It's just a simple upgrading process, and we've already got a guy who's spoken to all the local authorities, and they're given the okay on all the permits to upgrade everything to a greater capacity. We're quite strategically located as well. It's quite easy to ship to, say, Los Angeles if you want to export, or just the train system just to get to the rest of the United States. So yeah, it's pretty well set up. I mean, we got quite lucky with this one. So yeah, there's just a little bit about who we've been approached by already. I mean, we've got orders exceeding $10 million already. But to be honest, I think that's probably a bit of an old figure. If you were to add up everything we've actually been offered, I mean, we'll never be able to meet the demand here. I think even if we were to keep ramping up for the next 10 years, until the point where we're producing tens of thousands of tons a month, we still couldn't meet what people have been asking from us. So the great part is about that, obviously, is whatever we can produce will be sold. And a lot of the guys are willing to pick that up from site as well. So it's a great little operation, and it doesn't have to be expensive. Whereas you look at mining operations as being $50 million investments and that sort of stuff. I mean, we're looking at $5 million worth of equipment, maybe a couple $1 million worth of infrastructure upgrades and construction costs. And then, we've got a $20 million a year profit operation. And just to be a bit more blue sky, or talk about long-term strategy, I mean, it's not, with the profits we're looking at, it's not a huge jump to then construct our own hydrofluoric acid facility. So we have the only integrated or vertically integrated hydrofluoric acid production facility in the United States. And so that's another long-term consideration for the company. And then you're going from selling acid spar for $500 and $550 a ton to selling hydrofluoric acid for $250 a pound. So you can, so it's a no-brainer. So we go from a $20 million a year company to $150, $200 million a year company. So long-term prospects are fantastic. And we didn't mention it before, but there are no other mines, fluorspar mines that are scheduled to come onto production. There are none scheduled for permitting within the States. So, I mean, we're looking at going quite unchallenged within the United States for quite a long time. And with the emphasis on the US being self-sufficient and self-supporting, it just means more support from the US government, probably tax breaks, all sorts of benefits like that, just so we can really get going well. I should really hand this part over to Raul, actually, because this is just the current drill program that we're doing at the moment and the previous one. So Raul can talk a little bit about this, but this is on the permitted area that we're currently looking to mine initially.
So what we're looking in this slide is a plan view where you see there's a concentration in drilling, and all these color bars, this code is the fluoride grades, and that matches with the previous image of the previous slide, which is where the drill was located at the bottom of the existing pit, which is a spectacular view because you see all the purple in the mine phase or the pit phase of we call the Little Giant Pit, the LGP, as you can read on the press releases. Now, one of the things that we wanted to test is in all these USGS reports, they are always the historic production was reported and what was shipped out with high grades of 80%, 90%, 70%. But being those operations in the 50s and the 70s, it's very easy to think that they were like high grade in the ore. We want to know what the average grade of the pipes are. So what are we actually going to find if we want to go big scale into mining this? So our first run of delineation drilling, we wanted to see how deep that was and how fluoride behaves, and then what are the variations in it. And we were shocked when we realized that this Little Giant is like a bucket, like a flat bottom one. And the first 150 feet, they are consistently 68, 65% for long intervals, 30, 40 meters. This very, very high grade, that's direct shipping right away. And it's all consistent, evenly distributed. And then there's a sharp boundary and grades down to like 20, 30%, which is the low grade, which we think is low grade. But that 20, 30% is even above the average of the comparable mines in the world, which is what they're actually mining with really bad metallurgy, with silica and sulfides. And for us, it can be blended with the other high grade and can be floated, can be diluted, can be shipped as well. So we came with a nice delineation of an area, and then what you see in the upper part of the grayscale picture, I took the satellite image out of that, so I left only the hill shade grayscale in the topography, is the old Purple Pit. The Purple Pit was the biggest producer in the area. So that goes continuously to a depth of 400 feet. And I was wondering, why do we get only to 150 feet on the LGP? That one goes to 400 feet. They're only 30 meters away. Sorry for mixed the units. They're only 30 meters away. So at some point, they have to be connected. And we went with a drill actually last week. And those are the 4 holes that we just punched in. And we got more than 50 meters right now, more than 150 feet now, of fluoride mineralization still open at depth. We still have that like bucket shape equivalent of the Little Giant to the north, so it matches with the shape of the pipe, but it's getting, the ore goes deeper and deeper, which is a good thing from the same elevation part towards the Purple Pit. And next 4 holes that we're gonna drill, they're gonna perfectly delineate the entire thing, and we might be able to open pit that area in the middle, because it's only like 10, 15 meters of overburden and matches with what's been taken out already of the Little Giant. So it's a continuous. It's the 2 old guys that were mining that probably didn't want, they just wanted to go vertical for safety. They never wanted to go sideways in case that collapsed.
Pretty much.
And for us, it is an advantage. Plus that, we get other targets nearby that we're gonna develop. But this is just by completing this drill plan, we think that we're gonna just double the amount of ore or resources that we first delineated on the first pass right under the existing pit, doing this delineation, drawing understanding of the behavior of these pipes, was actually controlling them, textures, etc.
Thanks, Raul.
We just have a quick question here as well.
Yeah.
You can see that.
Sure, I'll answer that one. What level of study has been completed? So it's quite important to talk about the nature of this deposit, because say, for instance, if you've got a gold vein, you would put a couple drill holes in it and you would extrapolate between the drill holes. But the deposit that we have isn't like that. It's not in a vein system. You've got separate pipes that you can't extrapolate between. So each pipe needs to be delineated drilling. So you can never put a resource over the entire area. The way a lot of industrial mining operations work is you'll delineate the first year or maybe 2 years at tops worth of production, mine that, and while you're doing that, you'd move on to the next pipe. You delineate that, so you had your next 2 years lined up after that. And so that's exactly what we're doing here. So we've delineated what our first mining operation will be. The mine plan, for instance, will probably have a rough number of tons, probably in the region of 100 to 150,000 tons to be getting along with in the first couple of years. And then while that's going on, we'll just drill onto the next few holes and we'll delineate those. And we'll just keep doing that for the next 30, 40 years. But to give you an idea, if we were to put to try and put a reserve over the entire area, we'd be looking at, I don't know, 10 years worth of drilling and probably $30 million. Whereas, you know, for a fraction of that, you can just get straight into mining. And that's the thing with industrial minerals, is it's a fast track into cash flow, and it's just periodic updating of your resource for the near-term future. So
Just a follow-up question on that. It is interpolation, not between two holes.
Sorry, you are correct. Yeah. Thank you very much, Danny. All right. So this is actually very fast to get going because of the permitted, the fact this is all permitted and ready to go. So what we'll be looking to do in the next few months is what we're going to finish the mine plan off with. Raul's just going to polish off his drilling. The mining engineers are already working on the 3D models, the CAD designs, the mine plans, all of that sort of stuff will be done within the next 6 weeks, that sort of area. And then they're probably going to be looking, it says underground mine there, but it's probably going to be a combination of open pit and underground. A lot of this stuff we could probably scoop from the top, and then just for a really, really low cost mining operation. It's going to be truck to delta. You're going to have 3 dump trucks just running in circulation. And then the process is very simple. There's no toxic chemicals involved. There's nothing like that. It's a crushing circuit, grinding, ball mill, flotation, and then it's just bagged, and then it just goes straight for shipping. The reagents that we're looking at using, it allows us to take all the waste and just put it back in the ground, into the empty pits, and that's classified as reclamation. So all of the chemicals we're using are innocuous. There's nothing, I mean, you can be put, to give you an idea of how safe it is, it can even be put back into the water supply without causing any difficulty. So thankfully, not like a gold operation or anything like that. Very, very simple. Probably in the first a couple months of production, you'd be looking at sort of 3,000 tons. It says Metspar there, but the plan would be really to go straight to acid spar as soon as we can, unless we've just got a huge amount of Metspar sitting there. And then just produce as much acid spar as we can, because it's got the bigger margin. And we'd ramp that 3,000 tons a month up eventually over the next couple of years to producing 10,000 tons a month. And then it's a huge, we have several pits open at the same time. Several pits open at the same time. And that way you can take, it's just linear. You can go from a 3,000 ton operation to 6,000 to 9,000, just keep going. And there's not a huge limit on the sort of production capacity we can go for. All right. Yeah, well, this might have talked about that already. So just to go over the next couple of years as well, what's been left out of this slide is we're going to finish the drill plan for the current operation within the next couple of months, probably the next 6 weeks, hopefully, I'd imagine, something like that. Then we've already completed the metallurgy, so we've proven in the labs we can upgrade this thing to acid spar quite easily. We know the whole process. Our process engineer has just finished putting the plant design together. All the components are chosen. That's even gone off to plant manufacturers now, so we're beginning the tendering process on plant acquisition. The equipment, the mining equipment, like the loaders, the dozers, all that sort of stuff has already been selected by the mining engineers. We've already started speaking to CAT and Komatsu about the acquisition of those things, and we're putting leasing arrangements into place at the moment. The attic construction and the open pit construction, we're hoping to start that this year. The long lead item here will be the plant, of course. So from settling on the final design, we've done that from settling on the purchase to the manufacture of that plant to the delivery to the commissioning, you're looking at about a 4.5 to 5 months process. But during that time, everything else can be set up. So the mine construction can be completed, all the equipment can be delivered, the utilities can be upgraded at site and the crushing circuit installed. And then, yeah, we're good to go at that point. And we can get ourselves up to, over the next couple of years, to about 100,000 tons of acid spar production. And then what I'd really like to look at after that is the construction of a hydrofluoric acid plant, just because, well, it's just more money, that's why.
We have a quick question here for the first one.
Okay.
What are the mining costs per ton, and what is the margin for met spar?
So the mining cost per ton we're looking at the moment, the mining engineers have come up with a figure of about $117 a ton. Met spar, the guys were selling it unprocessed for about $330. That's what the local brokers were paying for it. For our acid spar, you'd be looking at over $500, probably in the region of somewhere between $500 and $550 a ton. So it gives you an idea of the margin we'd be looking at for acid spar per ton of production. If you back calculate that with the initial 3,000 tons a month we're hoping to produce, and then taking that out to a couple of years with 100,000 tons, you can get an idea of how much money will be involved.
And then also here, follow-up question, do you have any plans for Nevada and Arizona?
Yes, yeah, so that's on a bit of a different topic because we have lithium properties there. Both of those are brine properties, so the good thing about those as a follow-up questions is those are also quick to production projects as well, which is really what I like. The Nevada project, we know there's high-grade lithium brines on those. So the plan would then be just to put a drill hole in those, pop that stuff to surface, and just have a basic cleaning operation. But we're really going to prioritize the Fluorspar here, get into production, be a profitable company, and then we can just bankroll our own things, because we don't really want to go to market anymore and raise money and dilute any further. We just want to bankroll all our own projects, including the Nevada and Arizona properties. So.
And Abani has another question as well. What is your payback period?
So you're looking really at about a year to a year and a half to pay back everything. So say we brought in, it'd be less than that if you include the equipment leasing arrangement. Even if you took the equipment leasing arrangements out and imagined you just bought all the equipment straight up without any leasing, you'd be looking at about a year and a half worth of payback period. Put the equipment leasing in there, you'll be looking at under a year to pay back everything. So it's a pretty fast turnaround. Just on the last slide, I think it's the last slide, 77 million shares outstanding. They're pretty much all in the retail group. You might notice the Mujim group there, they're our biggest investor. So they're actually one of the largest fluorspar producers in Asia. And so what happened with them is when we were doing our first financing, they expressed a real interest in backing us. I mean, we deliberately capped them, so they were always going to remain beneath 10% because money wasn't difficult to find for this. but we really wanted to have their expertise. So we put them, they invested. They came over to our site and they went around and had a look with some of their professionals. Based on that, they invested the maximum we allowed them to invest in. And they've been incredibly helpful, like because they run several fluorspar mines in Asia. I mean, expertise like recoveries, lock cycle tests, reagents, all of this information we got access to. And they were so useful. One of the guys, the chairman of their company, we put onto our board. And so whenever we get stuck on technical aspects, they just take it and they just do all that stuff for us for free. It's been incredibly useful having them. So they're our largest shareholder, and yeah, but the rest is retail. So, all right, and I think that might be it. So, if any questions want to roll in, shoot.
Great. We do have a question there, Stefan. If you're available, would you be able to answer that? We have a question in German.
My German's not great, so.
Stefan, if you're there.
Where are you, Stefan?
Die Hoxin, die Production.
Yeah. Okay. Well, we'll wait for Stefan. The other question there was, Dave, can you please turn off those sirens? So if you could.
Oh, I'll get right on it. Yeah. All right.
We'll leave it open for a minute if there's any questions. If there isn't, here we have one here from Marcus. How much are the production costs? Is the question. Oh, that's the German question.
Okay. All right. Well, we quickly went over that. That was the $117 a ton, obviously versus the 500 plus selling price for the acid spar per ton. As I mentioned as well earlier in the talk, if we can get to hydrofluoric acid where we're selling it $250 per pound, then obviously, that's even better. So.
It looks like Rupert was in a little bit late, so you might have missed this if you went over it, but did you get a resource estimate for that first deposit yet?
So the mining engineers would have a better idea of that. I did talk a bit about the difficulty with a resource estimate with this type of deposit because they're all individual pipes. So each pipe would need sort of 12 drill holes a month. I think with that, we're looking at about 100 to 150,000 tons just for what we're delineating now. And that'll take us for the next 2 years at least. So we'll have that done. But while we're mining those, obviously, Raul's already picked out, I think, 5 drill hole sites within the permitted area that we're going to drill out.
Yeah, we go within the permit like 3 or 4 more pipes.
3 or 4 more pipes within the permitted area?
Within 200 meters of this one.
Oh, yeah, okay.
So we're trying to get this as a primary operation, and then we got a couple dozen pipes already showing fluoride at surface, like Bell Hill in the south. There's a nice cluster in there that we can easily develop. Yeah. You go with, just with Google Earth, you zoom in, you will see some fluorspar patches right from the satellite image. Yeah. So they are so evident. Yeah,
that's right. So if you missed that, there's several other pipes that we've already seen at surface within that permitted area, but 100 to 150,000 tons with this resource to begin with, where we're drilling at the moment, and then get that underway. And we own our own drill, so Raul's just going to go ahead and drill as soon as we're in production on those new deposits and add those to the plan for the subsequent years.
Just another quick question there. $117 per ton at what production depths?
I think we're only probably going to go, what was the high grade end at?
50 meters initially.
Probably 50 meters, because to be honest, I don't really care about the 20% stuff.
Well, I do care.
Okay,
the market will shift, and then that can be mine. But,
okay, but like, I mean, initially, just for higher margin, it'd be nice just to mine out the high grade, and it just makes more economic sense. Once prices shift a bit more, maybe we could blend and throw all that low grade in there. It's still the same grade as all the big mines like Setfluor and the world mines, but it's just, we 50 meters, we're just going to be looking at the high grade to begin with.
Yeah, and one more question here, you might have already answered it. When will you reach the break even after beginning production?
Okay. All right, yeah, we did answer that already, but just in case you missed it, if you didn't include all the equipment leasing arrangements, you'd be looking about 1.5 years until you had a full return on your investment. if you include our equipment and leasing arrangements, which we've got in there, you're looking at 9 months, somewhere around about that. So it's under a year's time to pay it back, because the capital startup costs are not great. They're not huge, and the profit margins are decent enough that the payback period is fast. So.
Okay, so Bounty made a comment on that, but there is another question. What is the minimum and maximum investment your team will accept? My apologies if I missed this.
Well, we're looking at more of a debt financing at the moment, so we're not going to, because we don't want to dilute the stock very much. The way we would have to do any sort of debt financing at the moment is we'd have to do the whole thing, because we can't really stage this. We're just going to have to do the whole thing in one go. There can't be equipment, then plant, then construction costs. We're going to just get all the financing in, probably in the region of, say, 7-8 million, something around there, US, a whole amount, and then just throw it straight at construction costs, equipment acquisition, and plant procurement, and just go for it. So the minimum and the maximum kind of the same, sort of 7-8 million, somewhere around that. That takes us all the way into production.
Okay, another question from Marcus. How much cash does Aries have on hand, and what is the capital raising in the short term?
We've got, we just need enough money to finish the mine plan. So I think we've just got the $500,000 allocated for that. We've got Sprott, who have dedicated about $5 million US as soon as the mine plan's finished. So there's an agreement with Peter Grosskopf, who's the CEO of Sprott, that once the mine plan is finished, we qualify for $5 million in debt, US. And that combines with an equipment leasing arrangement for several million more dollars, and that pretty much gets us all the way there. There are other options we have at our disposal to avoid dilution, such as we have an offer for $3.5 million US for a royalty on it. I would, if we can avoid that, all the better, but it's certainly an option. But as far as money goes, we've got that covered, a lot of it. If we can obviously find a better debt arrangement, then fantastic. But at the moment, I think we're leaning in the sort of Sprott direction for financing the final stage, and then Sprott combined with equipment leasing arrangement gets us all the way to production.
So maybe at this point, we'll have the draw for the bull and the bear statue.
You can show it. Yeah, I'll pull it up right here.
Mike, do you want to be the hand model?
So I'm just gonna, so we'll get rid of that.
Should we answer Marcus's question?
Yes.
Sure, go.
Okay, wire and size, we're doing the 1%. Well, the Mujim group are obviously the 9%, and they're insiders as well. Oddly enough, when we converted, I put $100,000 of my own money into this, so I'm included. I've either included in that 1%, or I've ended up in the retail part of it. But because the exchange wouldn't let me convert a lot of the debts that I accrued, I had to take my bonuses in options. So if you were to include those options, I'd probably be at 4%, something like that. And the directors are the same. We weren't allowed to settle a lot of what the exchange wouldn't allow us to settle with our board and insiders in stock. So the board and the insiders had to be settled in an options agreement too. So I think there are 6 million options outstanding at the moment. And so yeah, that's the only thing the exchange would allow us to do.
All right, so we'll do the draw here quick, and then we do have one more question that we can answer after. So I'll just grab so this is what we're drawing for. So if you RSVP'd, you have a chance to win this. So we will just do the random pick right now, so you can see that it is real. So we've used your email addresses in here, and we will pick a random name. All right, so this email here, h_veld@simpatico.ca. If you are on the call right now, please note that. Otherwise, we will send you an email and get the details needed for that. Okay, so.
Any other questions?
There is a couple questions. So first one here was,
Supply chain.
Yeah.
Do you expect supply chain tighten significantly with US trade? Absolutely. In fact, there was even an announcement released yesterday from the States by the presidential office. An executive order was put out about the importance of critical minerals, especially the 13 rare ones that are 100% imported. The US is struggling. It imports 100% of these things. Supply for these materials has really tightened up. That's why we've gained so much attention. And it's just going to get worse for the States and better for us. So to put it mercenarily.
David has a quick question. Options are priced at?
Options are priced at, what were they priced at?
16, I think.
I think 15.
15 or 16. Yeah.
My first options that I was issued, I think they were at 10, and then I think the rest of the directors, I think they were issued at 15. So they're in the money already. I think we're sitting at about 19 cents today. So they're in the money already. And what's that warrant?
Yeah. So maybe Dave, you could just go over Zimtu's involvement.
So Zimtu just recently got involved with Aries, and we're certainly very pleased to have them aboard, part of the Zimtu family. We currently own 1,250,000 shares, and we have an additional 625,000 warrants at 15 cents. So they're in the money too. That's good. Thanks, James.
That's all right, David. Feel free to cash in anytime.
That's because he'd get the 15 cents, I'd get the 4 cents.
That's exactly right, yeah.
Anyway, certainly, thank you very much for coming. This is clearly a great opportunity to buy stock in the market, because they don't really need to finance much anymore. Your opportunities in the market, you'll end up with free trading stock. It's open pit, it's high grade, you can't go wrong.
Yeah.
Thanks.
Good summary. Thank you, David.
Anyway, thanks for coming, folks.
Thanks very much, everyone. If anyone wants to send me any questions, just email me. So.
Oh, and I'm supposed to mention that there will be a recording of this broadcast available through Zimtu's website. We'll try and talk Aries to put it onto their website. It'll be on YouTube. It'll be everywhere.
Okay.
So you better buy stock before we get that out.
Yeah, it'll be on our website too. So, all right, great.
All right. Thanks, everyone.
All right. Thanks very much, everyone. Thank you. Yeah, thanks.
Always ready to close, eh, Dave?
Take your time.